Hey, what's up, guys? Carlton Flowers here, your crypto pro.
Yay!
And I wanted to get a quick update on BTC for you because I've been really busy. Tonight I've been working at the body shop. I got my dirty old t-shirt on here that I was busting some body work on a 1984 El Camino project, which I'm going to shoot a video and give you a little tour of the shop if you haven't seen it. And that's what I do in my spare time. I have a custom body shop. I do custom paint jobs. So anyhow, I wanted to get in a quick update here, unrehearsed, and I'm just going to read these charts and tell it just like it is as soon as I mute my phone so we don't have dings going on the entire time. Let's get rid of my dirty face. And here we are. We will start. Well, that's actually ADA. We want to start on Bitcoin. So here is the Bitcoin chart on the one-day chart. Let's just move this up a little bit so we can see. And we're just starting on the one day so I can start simple and then we'll break it down. Right now, we are looking at a nice little red candle being formed today right there. I want a thin line. Let's go with a thin line. There we are. Here's our little red candle and a stochastic with the %K, the blue fast line. Looks like it's curling over a little bit, maybe closing the gap between it and the %D, the slow line. And if that continues, they'll cross over and we could have a change in direction. As you know, sometimes the fast line crosses over the slow, just like here, but then it reverses and we get a double humped camel. That's what I like to call this, is the double hump camel, where you've got a twin peak there. And this makes kind of a triple here, the third one, where it's just hanging out here above the zone between overbought and the regular zone, which is above this 80% line. All right. So what we have had happen since the last video that is significant is the breaking of the upper resistance zone, the upper support resistance zone. This is right here. So instead of hitting this and monkeying around in and out and then dropping back down, this time we blew straight through it. So we can see here that 1, 2, 3, 4 daily candles, and the third one just blew straight through it. We had 4 green candles in a row. What this could mean is that the next time we come down, and that is a big if because we don't know if it's going to come down yet, we could hit here, and since it has been violated, it could turn into a support, not a resistance. It might lose its power. Now, that's not a guarantee because this is just the first time that it's broken through. Sometimes you can hit it, reject, go through it, and then drop through, and then it's really a strong resistance. But usually when you go through it, it flips and becomes a support. Not to say that we couldn't get a drop through it after we have a rally once it becomes a support. All right, so that's the first thing that I wanted to clear up before we move on to the other obvious things that I see on this chart. Let's clear this out. It looks to me like on the one day that the MACD was just on a tear and we had a divergence going on. And what that means is, while the price was going down when we were sailing through here, let's make that red so we can make it opposite color. Here was price going in this direction, right? But then notice what the the MACD oscillators, what were they doing? We had this low point here, and then overall, it was moving like this. So here they were on the rise while price was going down. And when you get a divergence like that, it's usually a hint that you're going to have a reversal in trend, which is what we happened after we finished this stochastic low point, which was below the 20% line, which is the oversold boundary line. So then we went on this tear and we had the record-breaking number of the green candles in a row on the one day, and we did break through the support resistance, but then we gave it back because we only had a candle close on the 4 hour above it, if that. We'll have to look on there and just see if there was a candle close on the 4 hour. But we broke through, but then we could not get another candle completely out of the quicksand zone. So we fell back into the quicksand and it sunk us and yanked us back down. But then we somewhat bounced on the 50 EMA right there and went and tried for it again, and we broke through. So from the 1 day chart, the only thing that I could say is it's going to take a lot of strength for us to continue this, where this hump just stays up here again, or does one of these numbers. And we've seen that happen in the past. But right now, I would say the highest probability is going down from here, at least to test the support resistance zone with a potential bounce, or violating it and dropping down through the bottom of it. Now, let's clear this out, and we're going to scroll back and look at some of the crazier times that we have had more than a double hump camel. And here it is. There's two right here that I want to take note of. And it was at the beginning of 2021, mid-December through the beginning of January. Look at this. Let's just count the humps here. We got a lot. We have what? 1, 2, 3, 4 humps on this one. And it just stayed up here. It wouldn't go down. And that's when we had this major run up. Let's scrunch this down a little bit so we can see it all. Look at that run. That's a significant run. It lasted for a long time. And then the next time we had it was all through this period where there's not even humps. It was just a boom. We just flatlined and just buried it out. And we had this action that took us almost, we thought this was going to be the high point, and then big correction after that, back in that time period. And so, of course, we had the correction, and then it took another run at it, made an all-time high, which we had this weird one, a miniature double hump. But then we correct down, and it went on a tear again, which was really weird because when we get to the bottom of this complete cycle, price hadn't fallen that much. And then boom, we go on this tear with this hump here. And as the stochastic was acting like it was going to go back down, it reversed and gave the second hump and gave us our all-time high. And then from there, we know what happened with the lower high, and that sounded the alarms for possible reversal in trend. We always look for that when you have a lower high after a series of higher highs. So we went higher high, higher high, higher high. This was a fake out lower high, and then we hit the all-time high. And then that next one was the one where we were all scratching our heads wondering if that was it. And of course it was. So here was the next lower high. We thought we were back on track again, and then we went back down, and then here we are today. Now, when you look at it from this perspective, I would say that it's not time to sound the all clear siren, because it's not all clear. We got a long way to go. Let's look at how much of a chunk that we are still below the previous all-time high. There it is right there. All of this area is going to have to be surpassed. We're going to have to blow through this entire area here before we can say that there's an all clear, because it's not new news. If we get through here and we surpass this, that's we've done it before. It's what is expected to build from that previous all-time high. So until we can take that out, don't get too excited. Now, the volume nodes on the 1 day, we can see the one that's around 58 and the one that's at around 50. Those are targets right now. If we bounce up out of the support resistance zone and move up, we could go here or here. And I'd say it's a 50-50 shot of either, maybe more likely of going up here, simply because we've got momentum now since this breakout. But that doesn't mean that we don't have a correction there. Because do you think we're just going to go straight to the moon from this point if we hit this 58 node? I don't know. It's not just going to go straight up nice and smoothly. Usually what you have is a heavy correction, and then it could be actually from something like the stock market crashing or the pandemic goes nuts. There's always some crazy black swan event. Now, as far as the market cycles, they get longer, not shorter. And so this year we would expect that the peak of the bull run would be anywhere from October to January. And I think it's going to be closer to January, like maybe December-ish, than it would be October, because that's just not enough time for another massive correction to go for them to shake us out, the institutions and the smart money, before they push it up and then we hit that 100 to 150,000 range by the end of the market peak. That's what I think will happen. And don't go betting money on that. This is not financial advice. You do your own thing. I'm just looking at the chart and we're discussing. This is a conversation amongst friends. I'm not I'm not on here to make a name for myself as Nostradamus, okay? Like these other nitwits that run their mouths on YouTube trying to lay claim to the title of being the crystal ball, the holder of the crystal ball. Now, let's just look at the 4 hour really quick, and then we're done. And we see that there is a red candle here followed by a kind of a little dot. I wouldn't even call that a doji yet, of a green. And then the stochastic is undecided right now. This is just flatlining. It's just flatlining. Anything can happen here. But the longer that we flatline with both, then that would kind of be concerning, where I would say we're probably going to correct. Now, with the stochastic that was slightly moving down before, with the price moving up, that's a divergence. And that kind of says, hey, we're trying to move down on the cycle, but price keeps going up. And that could mean blasting off to the next level. We saw that happen, what? Right here. Look at the stochastic going down, trying to pull down into a full cycle. And while we did that, what was price doing? Ba-bam. Just like that. The same thing here. Look at stochastic. Creeping down. Look at price. Holding strong, slight dip, ba-bam. So whenever we see a divergence of the stochastic and the price, there's a possibility that we could break out. Now, the one thing that we don't have really right now that we had before, in this first zone, we were in a very bullish rising MACD area. Now, the second one, the MACD was going down, so that was just a double divergence. Right now, the MACD is looking bullish, but the fast line is kind of approaching the slow line. But while this is moving up, and this is moving down, and this is moving up, something doesn't add up, so we could get that bounce. But we'll just have to wait and see. The one day it looks to me like we're going to correct. So these charts are not in agreement, and therefore, I would say that there is an absolute 50-50 shot right now of going up or going down. And then I'll be looking to see what happens when we hit the support resistance, if we're going to provide support or drop through it. That is all I can see right now on the chart. Post your comments, your thoughts, and tell me if you see something more clear than I do. I'd love to hear your opinion, or if you agree or disagree with my overall prognosis. Post it in the comments. This is Carlton. I am out.